Our next guest is closely monitoring the actions of the FDIC. He expects the group to adopt rules that are more relaxed than what was initially proposed. Mark Tenhundeld is the Senior Vice President of the American Bankers Association. He joins me now from our Washington newsroom. Mark, welcome to Bloomberg News.
Thank you very much, Mark. Glad to be here.
The FDIC board meets this afternoon. They will consider new rules that could encourage or discourage private equity firms from taking over failed banks. Which way do you think the FDIC is going to rule today?
Well, we won't know until the board actually meets, but what we're hearing is that the FDIC got a lot of pushback to their proposal and is reconsidering whether they set the bar too high.
Were the initial guidelines too strict?
We think they were. The original proposal would have had private equity have to maintain what's called Tier 1 capital, which is basically the common stock in a bank, at 15%. Contrast that with a well-capitalized commercial bank at 6%, and you see that there was quite a bit of disparity between the two. We think it's important that private equity have a high hurdle to clear, and that anybody who comes in and buys stock of a bank be serious and responsible and be there in good time and in bad, but the bar was set so high we were afraid that the FDIC may be scaring some good sources of capital away from the industry.
So you think that Tier 1 capital ratio of 15%, you think that was too high?
I think it was. Yeah, I think they could lower it significantly, still have a bar higher than what would be required for a new bank, for instance, but not scare private equity away in the process.
What number is it going to take to get private equity back in the game?
Well, we'll have to wait and see what the private equity folks say about that. But just for purposes of illustration, if a group of investors wants to buy a new bank, a de novo bank as they're called, they would have to agree to maintain Tier 1 equity at 8%. So what the FDIC was asking for was almost double what they would otherwise ask from a new organizing group.
The FDIC chair, Sheila Bair, how flexible is she on some of these issues?
She has signaled that she's willing to keep an open mind. She has been reported as saying that when they went out for comment with the proposal, they realized that they were setting a very high bar and that she was interested in getting feedback from people who would be interested in buying banks, as well as from the industry itself. So I think she is going into this with an open mind, and I think she will demonstrate some flexibility.
Which issues are most important for her to change?
Well, I think the Tier 1 capital is probably the single biggest impediment in the proposal. As I said, it was almost twice what they would otherwise ask in the context of a new bank. And when you set a bar that high, what you're saying to private equity is you won't be getting the kind of return on your investment that would be attractive to you, or if you were to agree to that 15% threshold, you would have to engage in activities that are so risky as to generate a return worth putting that kind of money into the bank. So we think it's actually in the better interest of the banks that they would be buying to set a little bit lower threshold so that there wouldn't be this incentive to take risks.
Mark, we have a little less than a minute left. Why do you think there's so much skepticism about allowing the private equity industry to get a major stake in the banking industry?
Well, typically, private equity investors have a little bit of a different incentive than your average investor who's going into a bank. They have a shorter time horizon, typically. They're looking for higher returns, typically. And the concern has been that they would go in and that they would do whatever they could to maximize profits in the short term and then turn around and flip the bank without any regard for the long-term health of the bank. We think that there is a middle ground between what may be a typical private equity play and what the FDIC has proposed that is still consistent with safe and sound banking.
Mark Tenhundeld, Senior Vice President of the American Bankers Association, joining us from Washington. Mark, thanks.